Welcome to your ultimate pit stop, Piston Pundit. In early 2025, US-Canada trade tensions surged as President Trump pushed forward with a 25% tariff on Canadian softwood lumber, aiming to redraw North America's trade map. The impact was swift. Weyerhaeuser, a US timber titan, saw second quarter profits sliced in half, citing softening demand and tariff uncertainty. Meanwhile, Canadian officials hinted at leveraging pension capital in talks, while US senators rushed north to revive stalled negotiations before the hard August 1st deadline. With markets shaking and industries bracing, this is more than a tariff. It's a high-stakes collision of politics and production. Tariffs rekindle a long-standing lumber war. February 2025 saw the U.S. reignite its long-simmering lumber war with Canada, this time dropping a hefty 25% tariff on softwood imports, while oil and energy goods got a milder 10% hit. These new duties stacked on top of the existing 14.54% in anti-dumping and countervailing tariffs, bringing the total burden dangerously close to a punishing 40%. By July 25th, the U.S. Department of Commerce had finalized a fresh 20.56% anti-dumping rate on 2023 Canadian lumber, an unmistakable signal that Washington was going full throttle on enforcement. Commerce Secretary Howard Lutnick made it crystal clear: the August 1st deadline is locked. No more grace periods. Weyerhaeuser's CEO backed the move, calling it overdue support for U.S. mills buckling under what they claim is unfairly subsidized competition. Meanwhile, Canada, caught off guard, is now considering lumber export quotas for the first time in decades. And the consequences weren't just diplomatic. American companies were hit fast and hard. Let's take a closer look at who's feeling the pressure. Weyerhaeuser's profit slump, a hard hit from the trade track. Come late July, Weyerhaeuser dropped a bombshell. Second quarter 2025 profits fell a dramatic 50%. From $173 million last year to just $87 million now, cut clean in half. Revenue ticked down 3% to $1.88 billion, slightly above analyst expectations, but that's little comfort when earnings per share missed the mark. On the investor call, Weyerhaeuser brass didn't sugarcoat it. They expect a further $60 million drop in Q3 adjusted profit. The culprits? Weak demand, oversupplied markets, and rising costs from the looming tariff regime. Lumber and OSB prices lost traction, and builder sentiment hit the brakes. While there's been a whisper of price stabilization, it's not enough to ease investor nerves. The company isn't standing still, though. Weyerhaeuser's beefing up its position, snapping up timber acreage, expanding engineered wood capabilities, and greenlighting a $100 million stock buyback. The goal? To ride out the turbulence with muscle. But that corporate resilience won't mean much if housing demand continues to shrink. Let's talk about how these policies are hitting the American housing market. Before we delve deeper, do us a favor. Tap that subscribe button and turn on notifications so you never miss a shift in the global auto and trade arena. Piston Pundit brings you analysis that cuts through the noise. Housing sector feels the squeeze from both ends. In May, U.S. single-family home sales took their sharpest dive in nearly 3 years, slammed by rising interest rates and surging lumber tariffs. At the same time, housing inventory ballooned, leaving developers wary and buyers sidelined. With lumber costs swinging wildly, many builders have hit pause, and projections now estimate tariffs could tack on up to $14,000 to the price of a new home by 2027. Lumber producers like Weyerhaeuser warn the uncertainty is already cutting deep, raising costs for raw materials and finished products, while chilling demand across the construction pipeline. Industry groups such as the U.S. Lumber Coalition argue that stiffer duties are necessary to counter unfair Canadian pricing, but even they acknowledge the ripple effects. As construction projects slow, the pain flows backward, hitting sawmills, wood product plants, and suppliers alike. For Weyerhaeuser, this translates to slimmer margins and steeper headwinds. But while the U.S. housing sector struggles, Canada is recalibrating its strategy with striking precision. Canada's Countermove, from Rhetoric to Realignment. Canada's trade response is no longer just talk, it's turning tactical. Trade Minister Dominic LeBlanc recently spotlighted Canada's $1 trillion stake in U.S. pensions, growing by $100 billion annually, as quiet leverage. While there's no direct threat to withdraw that capital, it signals that Ottawa holds more negotiating weight than Washington might expect. Prime Minister Mark Carney has been firm. Any deal must protect Canadian jobs, and he won't rush to meet the U.S.'s August 1st ultimatum. In a dramatic shift, Canada is also weighing export quotas on softwood lumber, a long-standing U.S. demand that Ottawa has resisted until now. The idea gained traction during visits from bipartisan U.S. senators pushing for a USMCA-backed managed trade solution. At the same time, Canadian exporters are recalibrating. In just a year, the U.S. share of Canadian lumber exports has dropped from 78% to 68%, as more shipments head to Europe and Asia. While Canada explores structural solutions, the U.S. is pushing for a domestic timber revival. But can it really deliver? America's logging revival, racing against the clock. South of the border, the Trump administration is stepping on the gas, trying to revitalize the domestic timber supply by increasing federal harvest quotas by 25%. That means opening up more land, including areas protected by the 2001 roadless rule, to logging. Sounds aggressive, but here's the catch. Experts say this adds less than 1% to the national timber pool. It's like trying to fuel a V8 with a coffee straw. Regions like Skamania County, once booming with sawmills, are still reeling from supply gaps. But hope isn't lost. U.S. mills are investing in automation and robotics, trying to stay lean and competitive. Meanwhile, Canadian lumber companies are setting up shop in the U.S. South, closer to pine-rich lands and lower transportation costs. That's a hedge play. Shorten supply chains, dodge tariffs. The U.S. Lumber Coalition is cheering these policies on, arguing they finally give local producers a fighting chance. Still, legal roadblocks and environmental lawsuits are ready to gum up the gears. Even if more trees get cut, it could take years before those logs reach mill belts. And that brings us to the final stretch, the broader verdict on what this all means for the future of trade, construction, and consumers alike. Verdict: Crossroads in the timber trade. The U.S.-Canada lumber clash has reached a pivotal turning point. On one lane, the U.S. is ratcheting up tariffs, betting big on a domestic timber revival. On the other, Canada is countering with strategic finesse, leveraging pension capital, weighing export quotas, and shifting lumber flows to Europe and Asia. Caught in the middle, industry giants like Weyerhaeuser, battling margin pressure and market uncertainty. For American homebuyers and builders, the cost isn't abstract. It's rising construction prices, delayed projects, and tighter supply chains. This isn't just about two nations haggling over tariffs. It's about who gets to steer the future of North American trade and construction. Now we want to hear from you. Is Canada's trillion-dollar pension leverage a real threat, or just smoke? Should the U.S. cut more red tape for logging, or preserve its forest protections? Would a $14,000 increase in home prices change your decision to build or buy? Drop your thoughts in the comments below. And if you haven't yet, make sure to subscribe to Piston Pundit to stay ahead of every twist in the road. From geopolitical gear shifts to mechanical deep dives, we've got your six. Thanks for watching. Catch you in the next video. You can now check out any of the videos on the screen. There's plenty more to explore.